welcome to Ensure, your weekly guide to selecting the most prudent life insurance policy for yourself and for your family. You've figured out how much life insurance you need, how many years you need it for, how much you can spend, and of course also what type of policy best fits your situation. But your homework isn't finished yet. Now there are an array of life insurance policy add-ons called riders, which must be considered. In our last episode, if you remember, we discussed the benefits and the drawbacks of these riders, how to pick them, how to avoid some. And if your policy seems inadequate, you can basically beef it up by adding optional life insurance riders, which are essentially special features that you can tack on benefits and bring flexibility to your coverage. But of course, not all riders are equally beneficial. And on this show, we're discussing with our experts those life insurance riders that you should consider adding on and those that you need to stay away from. To answer those questions, in our studios today, Surya Bhatia, Managing Consultant, Asset Partners, and Harshroongta, founder of Harshroongta.com. Gentlemen, thank you very much for coming into our studios once again. We had a strong discussion going last time around. Harsh, if I can start with you. Available riders, they vary by the insurance company and the policy, as do the rules for how they work. We discussed this last time around as well, that costs vary depending on factors like age, health, the kind of policy, etc. Obviously, not everything out there is important or essential. Let's list out the different and the most popular riders out there and give our viewers a sense of why they should look at these riders. Should we start by detailing out what accidental death rider is? We discussed it briefly in our last episode as well.
So I think on accident there will be two kinds of riders. One is what, as you mentioned, accidental death, and another is accidental disability. So as accidental death essentially says, if the death is because of an accident, which is distinct from just death because of, say, an illness or something, then this is an additional sum payable over and above whatever is your base policy. Your base policy will also pay. The important thing is, if your base policy is enough, then just having an accidental death rider makes, in my opinion, although it's fairly cheap, in my opinion it makes no sense if your base policy itself is good. The real key there is accidental disability, and very few riders actually have that. That if you get disabled, you don't die. So obviously the base policy does not pay. But because of the disability rider, a certain sum becomes payable, which is mentioned in the rider. That certain sum can be payable over a period of time, as in terms of monthly, etc., or it can be a lump sum. I think that is a pretty useful rider in terms of accident.
Surya, you'd agree? Any red flags or any drawbacks that one needs to be aware of?
I think Harsh is just spot on what he's saying. You need to have a basic term insurance plans, and once you have that, ADB is important, but it's not that critical enough. And what he rightly mentioned, having a partial disability or full disability rider actually adds more value to it, because it starts generating you income at times when you may not be able to work, or there's an incapacity to work for you. Within that, you can actually add on that in case this happens, you can even add on to a rider, let's say a waiver of premium rider. That in case something like that happens, your premium stops, payment by yourself, and the company pays it, as the name says. It's a waiver of premium. But your policy continues because you're still alive and kicking, but you need a policy to be active in force, and if you're not able to pay the premium, then you have a problem.
Okay. Then, of course, there are other riders available, the likes of looking at partial disability, one that we also discussed. Also going back to and looking at critical illnesses. Now, that's something that we really need to be aware of, because in today's day and age, private medical coverage is exceedingly exorbitant. So how is this perhaps a rider that one should really look at strongly?
It's a good rider to consider, but you also have to evaluate this rider along with your normal health insurance policy. If you have a comprehensive health insurance policy, basic clarity, a difference which needs to be done between the health insurance or medical policy and a critical illness is that that actually gives you money on hospitalization.
Okay.
Vis-a-vis critical illness, that gives me an upfront money on detection of a disease.
Okay.
So the list down,
that's the critical differentiator.
That's a basic differentiator between the two. So on detection, you actually get the money upfront, and the policy may even lapse after that, or may continue depending on how much money you have taken out from the rider. So they list down the list of critical illnesses, which could be the major illnesses, typically like heart stroke, you have a cancer, you have an organ transplant,
Right.
you have a paralysis. So all the major illnesses are actually listed down, and on detection, the money is paid to you upfront. Vis-a-vis a normal health insurance policy where the money is paid to you at the time of
I
hospitalization.
have a view on the critical illness rider. I think critical illness is an extremely important thing, and I differ from Surya that it depends on your health insurance policy. Critical illness is exactly what we discussed. If the disability is because of accident, your accidental disability rider kicks in. You also, if you are disabled because of a stroke or because of cancer, etc., a disease that debilitates you and you survive, clearly you need a lump sum that will help you generate income, because your income generating source would have gone, and thankfully you are still alive, so your base policy will not pay. So I think the need for critical illness is very distinct from the need for medical insurance, which pays for the cost of treatment. A critical illness policy essentially is a source of income, and I think the amount of critical illness you need just cannot be satisfied by a rider, because critical illness policies are far more expensive than term policies.
Just going back to one of the other ones that I've also gone through, I see that lots of people are opting for a family income benefit rider. Is this something that you would look at strongly?
So I don't know what exactly you mean by the family. It's not a very popular rider. As I think I mentioned in the last program, if it is something that will pay you, that will pay your family a monthly income on the death of the policy holder, if that is the rider that you are talking about, then it is just a method of paying your sum assured. Instead of paying you lump sum, they pay you over time, say for 10 years or whatever that is needed. I think that's an excellent way of paying that sum assured. And I think that is something that you should definitely opt for.
Some of these riders that I came across in the market, which is basically, having some amount of regular income as opposed to, plus of course, the lump sum that you would get. And like you mentioned, there are various riders in the market beyond the ones that we've discussed, of course. Your insurer may not give you the liberty to modify your insurance policy according to your individual needs, but riders, of course, to a certain extent empower you with that much needed control on certain life situations. But let's take a quick commercial break at this point in time. On the other side of the break, we'll come back and discuss with Harsh and with Surya, how is it that you can look at gifting a life insurance policy to someone who's dependent on you partially, someone like perhaps your domestic help. Let's take a quick break. We'll be right back. Welcome back to Insure. Now, throughout this series, so far we've spoken about ensuring your life and the financial stability of your family. But how about considering something which can be useful to others who are maybe partially dependent on you in the years to come? How about gifting a life insurance policy? Yes, well, gifting a life insurance policy surely isn't as glitzy, during an occasion, but there are different reasons why you can do this. It's practical, it sets a good example. It also secures someone's future. Now, Surya, I have been looking at online articles and doing a little bit of reading. I saw enough articles about pensions, not nearly enough about life insurance. What is the simplest and the most straightforward way to help someone out by gifting a life insurance?
See, before you even start thinking of gifting an insurance policy to, let's say, a domestic help of yours who are partially or fully dependent on you, you need to actually make them aware about this. Because even if you give them, you have to service the policy for long. It's not giving them a one-time or a single premium policy. The very purpose of giving a gift of this nature is to ensure that the family does not have a problem financially in case something happens to him or her.
Yeah.
So therefore, the key over here is educating the domestic help or likewise. Once he or she is aware that what are the benefits being offered to me by this product, because they have to continue this. That's the concern you have in these kind of products. They have to pay the premiums and they may not be there for you forever.
Sure.
In case they change their jobs,
Yeah.
they need to service that premium regularly.
Yeah.
So once I educate them and give them the importance, how critical it is for them to have a policy or insuring themselves, even before you go and start saving or investing.
Harsh, just a quick word from you as well on this. Are there any nuances or traps here that as a gift giver I need to be aware of? Are there any tax implications, for example?
Well, there are no tax implications that I can think of. I have a slightly different view. I mean, as you rightly mentioned, if it is a gift, really, you need to pay for the premium. I would suggest you don't try and propose it, because if you try and propose a policy, it goes through a completely different kind of underwriting. It's best that you help him buy the policy, you just pay for the premium. So whether it is the Prime Minister's life insurance policy or the accidental death and disability policies, just pay for that premium. Let it come from his own bank account. That will also ensure that if he leaves your job, then he will probably pay for it next year, because those are automatic renewal policies. You can help him get health insurance policies, help him get it, pay for it. And apart from goodness of heart and the good things that you feel on helping your domestic, there is a solid commercial reason why you should be doing it. If there is a domestic who's been working with you, and if he or somebody in his family goes through an episode like this, he will typically come and borrow that money. He or his family is going to come and borrow that money from you. They are unable to pay that borrowing. They live fairly, they are always living outside the means. Clearly, they find it difficult. It may result in you losing a very good domestic. So, in fact, it makes commercial sense as well to pay for the premium for these incidents that can happen to your domestic or to his family. You feel good. It is over and above his salary, so he does not resist. He is not asking you to pay it as salary, and make him do it. You pay for the premium, and therefore, if he wants to continue, he will be able to continue it in the future, or you continue paying for it if he is continuing to work for you.
So, of course, at the end of the day, our suggestion would be to sit down with your insurance advisor, analyze your circumstances, evaluate the benefits of the riders, and then buy the one that is best suited for you and your family. With that, we're wrapping up this edition of Insure, but we're back next week. Thanks for watching.